Hello, good morning and good afternoon, NACo members. Thank you so much for joining us today. I would like to go ahead and welcome you to NACo's webinar on preventing county financial fraud and to introduce our moderator, Greg Puckett. He is a commissioner from Mercer County, West Virginia. Thank you so much.
Elena, thanks so much. Really appreciate everybody being on the call. I know there's several of you that are going to be coming on here momentarily. It looks like the count keeps going up, so we're going to be good to go. I do want to thank NACo for this amazing opportunity. Of course, the Honorable Kate Becker for all the wonderful work that she does, and I'll introduce her momentarily. But as Elena mentioned, my name is Greg Puckett. I am a county commissioner in Mercer County, West Virginia. I've had the honor of working with NACo for the last 7 years as I've been an elected official, and for all of the different pieces that we learn every day, one of the major things that we have that we need to know most assuredly is fiscal management. And today I think you're all in for a treat because we have one of the nation's experts, in my opinion, to come in and really educate us around this issue. And especially as we deal with the ARPA funds that are going to be coming out. We know the final rule is going to be dropped at any time, so we're really excited about that as well. Kate, I'm going to go ahead and give you an introduction today. I hope you're ready to go. But our keynote is the Audrain County Collector, Kate Becker from Central Missouri. Prior to her 3 terms in office, Kate served as in the United States Army as the intelligence analyst, spending most of her military career auditing fraud, waste, and abuse in the Department of Defense funding. She holds 2 masters from Harvard Business School in accountancy and data analytics, as well as bachelors in accounting, music, and business from Oberlin College. She has an extensive background in auditing government funds at the federal level, all the way down to the local or even nonprofit. Kate is very active in NACo, vice chairing several committees and task forces, and is the education chair of the National Association of County Collectors, Treasurers, and Finance Officers. Today, Kate's going to give an overview of the key fraud indicators to watch for within your county structure, as well as some action items that you can employ within your current fraud prevention efforts. Welcome all of your questions and comments. We ask you to hold those until the end of the time today for about 10 minutes. And with that, Kate, the floor is now yours.
Thanks, Greg. And thank you, Elena and NACo, for this opportunity. I've given this talk at several state associations. So if you've seen the bigger talk, this is kind of the Reader's Digest version, and I've reformatted it specifically for county commissioners as they are dealing with an influx of ARPA funds, how to protect their general revenue. Because as everyone is looking at the Fed funding, and we all know how much oversight is going to be on that, everyone else knows that that's where the oversight is going to be. So we're going to see a lot more fraud on the funds that maybe aren't as well oversighted, which is going to be your general revenue funds. So I'm going to share screen here. I've got a little PowerPoint presentation, which it looks like I am on the wrong slide. So let me get into it and back up first. This is what happens when you test and then you don't reset. Okay. All righty. Let me get that started. As you can tell, I am not tech savvy on one monitor. Is that on, Greg?
Sorry, I'm muted. Yes, it's good.
Okay. Are you seeing the actual PowerPoint, or are you seeing like?
No, I can see the PowerPoint. It has not. I can see your slides off to the left.
Okay, thank you. Let me fix that. Anyway, Greg, can you fill while I fix this?
Sure, absolutely. So what we're going to do is the last 10 minutes of the presentation today, we'll make sure that we have that. If you've got any questions, make sure you put them off to the side. What I would like to do is call either on the questions, and I'll try to watch the participant hands up as well. So either way that you want to do that is perfectly fine by me. Kate, are we getting close? I love how it restarts, right?
Man.
It's all good.
So we're just going to do it that way. It's just going to look ghetto. That's fine. That's fine.
It's fine.
It's fine. All righty. So, all right. So, like I said, this is supposed to be a toolkit for mitigating and detecting fraud within your office or within your county financial structure. So the first question is going to be, who is stealing from you? So we go off the Association of Certified Fraud Examiners We've always said, even back when I was in college, not to date myself, but more over 20 years ago, we call it the 80-10-10 rule. So 10% of people will always steal. 10% of people will never steal. And 80% of people will steal given the opportunity. So what we're really looking at is 10% that we're not going to be able to prevent and 80% that we can. So we're going to focus on the 80%. But that 10%, their key indicators is they're control freaks. They never take vacation. So they're, if you have an employee that constantly is losing vacation time because they didn't burn it, and they are in a financial role, that's someone to look at. They're exceedingly defensive when questioned. They're predominantly male between ages of 31 and 45, and they are going to be tenured employees of 5+ years. I can't move this around. Struggle bus. Okay. What are they embezzling? So, and I will get into the ARPA funds and the CARES Act funds because we already have those numbers, but 5.8% of gross world product is going to get embezzled. So in the 2020 data where we were talking at a cap of $6.7 trillion, that is obviously less in a smaller organization like county government. If you're a rural county, based on how much funds you have to embezzle, your amount's going to increase or decrease. But that's, if you expect about 5.5 to 8% off the top is what you are going to lose in embezzlement. Why are people embezzling? Predominantly, we are seeing more and more that it's a substance abuse issue. So they're living beyond their means. They're struggling financially with family. But a big reason is hubris. It's just because they can. And so again, going back to the 80%, this is what we're trying to avoid. We're trying to avoid the fraud triangle or the recipe for opportunity, as we call it. So this is the 3 things that fraud has to have in order to perpetuate. So you have to have a pressure to commit fraud. And again, we're focusing on the 80%, those that will commit fraud given opportunity. The pressure to commit fraud, the opportunity to commit fraud, and rationalization. And I really want to focus right now on rationalization because the other 2 those aren't really things we can control. We can't control someone's home environment or their addiction that's going to give them the pressure to do that. We can put mitigating things in place to prevent opportunity, but rationalization is something that's very clear, very easy to point out, and very easy to stop. And what I mean by rationalization is I am a county tax collector. If one of my employees were to take in, let's say, a $20,000 tax bill in cash, the very thought, if they verbalize it, that, oh man, if I had $20,000, I would XYZ with that. I'd go on vacation, I'd buy a new car, I'd invest in a house. The second that they have internalized how they would spend those funds, they have already construed a way in which they would make that happen. And so we have to really nip that in the bud because we are all dealing with taxpayer dollars, whether it's federal funds that came from taxpayer dollars, county revenue, sales tax, property ad valorem tax. These are all tax dollars. It does not belong to anybody. And so when you allow the culture or the talk that those funds can be used or personally justified, you have a trigger and you need to nip that in the bud very quickly. So that is what we call our little recipe for opportunity there. And the average embezzlement will last about 18 months before it's discovered. So if you think about it, the 18-month mark for when COVID started would have been September of 2021. But if you think about when the CARES Act funds started getting distributed, we're about at that 18th month mark now. So we should be seeing more prevalently the telltale signs that fraud has occurred. And so that's why, again, this presentation is important on how to spot those so that we can mitigate them and reverse them if possible. So here's a little slide that I stole from the Association of Certified Fraud Examiners website. And we're going to talk about these different layers later on, but the top one is 51% of organizations have uncovered more fraud since the onset of the pandemic. Why would that possibly be? To be honest, especially not just organizations, but company structure, think of it as how many conferences did you go to during COVID? How many vacations did you go on during COVID? You were more boots on ground and more financially focused on how is this affecting your books? How are you going to pay for things? How are you going to create this line items that it doesn't affect the rest of your budget, or where you're going to have to reallocate your budget? So more people were focused in on their financials in a way that they've never really taken the time to. Plus, they were actually behind their desk more than they predominantly were year over year. So as a contractor, as someone that does contract fraud work, I normally do about 5 or 6 international cases a year because they're very exhausting. And I decided to do US cases because of COVID. I did 92 cases in 2020, because there were so many more business owners at home, at their actual offices, not going on vacation, not going on that cruise, not going on that conference, and going, something doesn't add up here. And we just found so much antiquated fraud that had been perpetuated over a long span of time because someone was finally looking at it. So that's going to get us to, this is a report that Thomson Reuters compiled with 2020 data. So even though it says findings from the 2021 fraud, waste, and abuse report, this is based off of 2020 data. So this was published at the beginning of 2021. They interviewed 100 county, state, and local government offices on what they felt the fraud trends were for 2020 and how to mitigate those. And this goes back to on that slide before of people being more boots on ground. We are talking about prevention. So obviously prevention is key. And the next steps, these next 4 bullet points are how we are going to prevent that fraud from happening. So the first one is speed versus accuracy. And again, if you think of this data being from 2020, what was happening in 2020? We got this huge influx of CARES Act funding with very little information on how to disperse those funds, but almost this immediacy of this money needs to get out the door. This is to protect your businesses, to protect your citizens, to protect the health of your communities, and it has to happen now. But at the same time, you need to create this huge audit trail so that if we come back and recoup it, or request a recouping, you can justify that expense. So we get onto this issue of speed versus accuracy. And that was obviously more of an issue in 2020, but it is still going to be an issue in 2021. We are all understaffed. We all have staff that's less tenured because our aged and tenured employees, as we have seen statistically, have not returned to the workforce. So we're in this balance of completing tasks that need to be done to prevent fraud, financial audits, bank reconciliations, year-end reviews, and we're trying to do those timely but accurately. And if I stared at my bank reconciliation for 2 hours instead of the 3 minutes it took me this morning, I could probably glean a lot more information than just trying to check that off a box. So we think of it as speed versus accuracy when we are talking about your ARPA dollars and your county general revenue. Think of it this way. A big way that we find fraud is when we go outside the parameters of how we spend year over year. So when you're getting those ARPA funds, if you're using them for, let's say, premium pay, you do not want to put that premium pay in the same line item in your budget that you would put normal payroll, because we're going to look at that as an internal auditor. And I'll get down here later in statistics of how fraud is caught. And that's number 2 is internal audits. We want to be able to see the pattern with no big increase. because that's how we catch things when things are outside the normal pattern. So I highly recommend, if you were doing premium pay, if you were doing the pay increase, or if you're giving that flat fee, create a separate budgetary line item specifically for that, which I know a lot of you have with your COVID funds. You could not use those as general revenue. If there was general revenue was already budgeted, you couldn't use those funds that way. So I know that you've already know how to creatively put this in your budget, but that payroll, I cannot tell, payroll and benefits fraud are the top things that we're going to see here. So speed versus accuracy. Our next one is the importance of triage. And what do we mean by triage? So triage is how we stop the bleed. So the very top pinnacle that we want is going to be human interaction, that human element of someone actually physically looking at the financial and going, okay, this makes sense or this doesn't make sense. But what we're lacking, as we said before, is staffing. So we don't have time for the human element to sit there and look at every single transaction that comes through our financials, which is why we have this internal audit procedure of 6%. So we have the triage of data sets. So that's stuff that we do year over year. That's just like anyone at home, like you have your own budget. And so you're going to have, everyone spends money and earns money pretty much within the same year over year sphere. Like that's why we have the COLA, we'll say, because costs go up from inflation, but we don't really change much in our spending and our earning habits. So as internal auditors, we do not have time to sit there and go through every line item. It doesn't make sense. So when we say data sets, we're wanting to look at any change that's more than 6%. And I know 6% seems really small, but if you think that you gave a 3% COLA across the board and how much that affected your budget, 6% is actually a pretty extreme indicator of something that's not habitually documented. So that's our number one. So our data sets are going to cut off a huge portion of what we're actually going to need to look for to find fraud indicators. We're not going to look for anything that's less than a 6% change. The next thing in triage is technology. There's a lot of technology out there that's specific for fraud prevention, but even if you don't have any of those, you still have the softwares that you've already paid and implemented in your offices, and you can run reports. But what I love about technology, especially with digital payments, is they create a digital fingerprint. And as we've seen, when we arrest people for these frauds, we aren't arresting them because they've, stolen money. We arrest them because it's wire fraud, and we're able to prove that with digital fingerprints. So when you're looking at paying out contractors or doing premium pay or anything like that, you're really protecting yourself by using a more technologically advanced form of payment because it creates a digital footprint. And then the last part I said, so we've taken away, so we've got the digital footprint, which think of it that additionally as almost like a prenup or new hire. So you get all the information that you need, that social security number, date of birth, gender, whatever you have. Like when you fill out a business license in my county, you're not filling out a license so I have all that information for me to issue a business. You're filling out all that information so that when that business closes and you owe me taxes, I have the information to sue you. And as awful as that is, that we have to get that information now, because when you're delinquent, you're not going to be very forthcoming with that information that I'm going to need to take you to court. So back to that speed versus accuracy, before you hand out those funds, before you allocate anything, make sure that you have all that information. And I highly recommend a ACH EFT payment system rather than paper check, so you have that digital fingerprint. because we can recoup funds electronically a lot faster than we can if fraud is done with a paper check. So like I said, so the big part is that data set that's below the 6%, then above the 6%, we're protected with that digital fingerprint. And then that very last element is stuff that we as auditors, as external, internal, what have you, are going to be looking at. But the ones you really want to empower are your employees. So when we look at how occupational fraud is detected, predominantly it's through tip, and those tips come from employees. So have you empowered in your county some position or some web-based form that allows for whistleblowing without, if they happen to be wrong, without any type of negative recourse? Have you created an environment where someone feels comfortable coming forth about potential fraud? Have you created a plan on how you would handle a report of fraud and the processes that you would go through to verify if that has not happened, if that has happened or not? So I'm in a very, not a very small county, but a decently small county. We don't have a county auditor. And to my knowledge, we don't have a policy or procedure for mitigating or reviewing or investigating any type of fraud that happens within our county structure. However, we do have a very good communication with our sheriff's office, and we have resources as far as the different individuals and their skill sets within the county that could mitigate that. So this is not something you need to seek externally. This is something you could easily make within your current employment structure. And there's so many easy diagrams on how to create those mitigating plans. But we want to empower our employees first and foremost, because they're the ones that deal with these transactions day over day, whether it's your sales tax revenue, water, sewer, health department fees, tax collection, any type of revenue coming in is going to have a higher risk of theft. And so the persons that deal with that day over day, they are going to be more likely to detect that fraud is happening. And then a very far second is your internal auditor. Like I said, in my county, we don't have an internal auditor. We essentially internal audit ourselves by doing those bank reconciliations, by doing our year-end financials. So if you're in a county where, unfortunately, we just had one of my counterparts in another county pass away, but it was determined that that person had not filed a year-end statement in 14 years or reconciled the bank account since 2011. Now, that doesn't mean that anything untowards or on anything negative has happened. It could just be that they were just not a good steward of paperwork, but someone's going to have to take that over. So internal auditors, we are very good at catching things, but we're going to catch the obvious. And as a fraud auditor, I can tell you that when I go into a situation, if I find what I consider blatant fraud, which means it's perpetuated often in the last fiscal year, and they're not even trying to hide it, that this fraud has been happening for a very long time, because it has got to the point where it is blatant. And when it is blatant, we know that they don't care anymore because they're impervious, because they know you're not looking. So internal auditors will catch blatant fraud a lot more than, say, the employees catching the fraud sooner. That 18 months was an average. I mean, there's case studies of fraud all the way back to 30 years, and there's some that get caught within a month. So the next one is managerial review, which, like I said, those are the people that are just going to be boots on ground. And you as county commissioners, think of all the things that you sign, especially for that financially impact the county. As we all know, when we take county office, there's a huge difference between may and shall. And I highly recommend on the forms that you are signing, that if you are signing any type of financial document, it be listed specifically with the statute or title that requires you to sign that as a shall sign, shall receive, shall what have you, or may, And if you're receiving it, are you receiving the information? Are you signing that you acknowledge receipt of that information? Or are you signing that you agree with the information listed therein? We have found statistically that when someone, specifically an elected official, embezzles, that another additional three on it, what was it, at average, additional 3 other elected officials will not be reelected. Now, some may choose not to run because of the stress of going through a very public, very unfriendly process of dealing with fraud within a county. And then there's others that don't win the reelection because they honestly, there's just lost trust. So even though your sheriff or your treasurer, or your recorder ends up embezzling, who predominantly gets dumped? The county commission. So be very careful on what you're signing and why you are signing it. And if you don't know, ask. It's in the statutes. And I guarantee you, it will be worth your time to investigate why you're signing that. Let's see. So we also have who reports fraud, like we said, employees, customers, your transactionals. Those are going to pinpoint because they're the ones that are going to say, I paid that. Here's my receipt. Why is it not receipted in the system? Then going on to technology. I cannot stress this enough. There is so much out there. There's so much that you can do. And like I was saying before, we don't take these people to court for fraud. There's already, I think there's 95 active federal cases right now that make up for $800 billion of CARES Act funds that are currently being investigated. And predominantly those people will end up with federal sentences because of wire fraud. We can't truly prove that they maybe weren't eligible for the funds or that they falsified paperwork, but we can prove that they received through wire a transaction that was not intended for them. So like this NFL player that back at the beginning of December was convicted and pled guilty to conspiracy to commit wire fraud. So that's why that digital fingerprint on financials is so important. And it's so easy to set up EFTs or ACHs with your other taxing entities, with your contractors, with your employees, and it's so much cheaper. Checks are not free anymore, but checks are so much more susceptible to fraud. And digital fingerprint is so much easier at prosecuting fraud that I wouldn't know why you wouldn't use such a free tool to protect yourself and help in possible future litigation. There's also, I know Thomson Reuters, I know Invoice Cloud. There's several companies that are getting more technologically advanced, not just in protecting you and reporting, but in ease of payment on the side of your citizens, where you can text bills, you can text receipts. There's so much new technology that is out there that is actually packaged as customer service products, but the back end data that they are voluntarily giving you is really helping you with that digital fingerprint for possible embezzlement and prosecution. So back to this ACFE slide, 38% of organizations, including nonprofits and county government, they are already intending to highly invest in anti-fraud technology. So don't you think that with the statistic that more and more companies that we already know and trust and possibly work with are going to be integrating new technologies to protect us with these digital fingerprints? So seek out your current vendors, see what's available, what is out there. And unfortunately, this last statistic is more than 80% of organizations have already implemented this, but expect fraud to increase with the pandemic. This is a news article that came out actually pretty recently, December 22nd. And I work for a different alphabet agency. So the Secret Service to me apparently is not that great at math. But when we go back talk 5 to 8%, the Secret Service is saying that nearly $1 billion has already been stolen from COVID-19 relief programs, where if you go back to our 5 to 8%, we're looking more at like $170 billion is more likely what's to be stolen. Actually, 170 is the low end. We're probably looking at higher to $272 billion just in that CARES Act funding. And that was part of that $3.4 trillion. So that's not just what came to counties, that's what came to states. That's what went to different entities for their prevention programs. So now we have this $350 billion that's coming out in ARPA funds. And so we're going to expect 175 to 280 $1 million of that is going to be embezzled by fraud. So again, that's going to be your big players. Your FBI is going to be investigating those. I'm personally more concerned about what's going to be happening to your county general revenue while we're all focusing over here on this big picture. But the more influx of funds that you get, the more it triggers that 80% of, well, you know, if I claim my kids, even though they're still in college, if I claim them on my taxes, then I can get that child tax credit. And if you give that 80% the ability, they just move themselves up with the 10. And we want them to move down with the 10 that will never steal. So I have a lot of case studies here that I can go over, but do we have any immediate questions at this time? You're muted, Greg.
I am now not muted. Thank you. I would encourage everybody that if you have questions, please post them in the chat. If you don't, I am trying to watch to see if there are any raised hands. But as of right now, I don't see anything.
So as they put in there, yes, this presentation is going to be available. There's also a one-pager with some resources that I have accumulated that I will be sending out as well. Alana has a question. If you're a county employee and you suspect fraud, what would you recommend doing as a first step? Okay, that goes back to most counties do not have in them a current plan of mitigation. So if you do not have this already, I highly recommend identifying a person, be that HR or be that, I know some counties have a web-based reporting where someone can come forward with a potential fraud and that gets investigated without harming them if that turns out to not be an actual case. But back to your original question, if an county employee and you suspect fraud, what would you recommend doing as a first step? Well, if you're a county employee and you feel like maybe that is your department head, you're probably not going to feel very comfortable going to the department head that there is fraud. And I just happen to have a wonderful relationship with my county commission. They are the chief governing body of the county. And at the end of the day, they're the ones that are going to have to deal with the fallout. So I would have them go speak to the county commission. Now, county commissioners, make yourselves available to your employees and make sure that they feel comfortable coming into your space. But you're definitely going to want to get with your sheriff's office, get with your local FBI, because they're the ones that will end up investigating these, and make sure that you guys create a plan and put that in the county handbook. What if that's not an option? Not an option to go to your county commission, go to the sheriff. If you cannot go to the county sheriff, I would highly recommend, depending on what it is. So if it is ARPA fraud, there is actually a website where you can report fraud specifically for that. Alana, I know you have that, if you can stick that in the chat.
Got one here. It says, would it benefit counties to have a public-private partnership to proactively take in financial crime?
Would it benefit the counties to have a public-private partnership? Like,
I would guess to do an investigation to take on financial crime.
I guess I would have to know the context. You have to understand fraud is it's a very sensitive subject. We really hate using the word, even though that's pretty much half of what this is fraud. But you say the word and it just makes all the spidey senses go off and the news press go off to proactively alert each other. Oh yeah, yes, especially if you're on nonprofits. So I do a lot of audits for nonprofits pro bono, and I can tell you, the best way to prevent nonprofit fraud is or even at the county, one time a year at minimum, look at the freaking bank statement. Look at the bank statement. Don't look at the QuickBooks report. I can make a QuickBooks report that says all day long that our nonprofit has $30,000 in the bank. But if the bank statement says we have $3,000, we have a problem. But so many people get used to those QuickBooks reports and they never review the bank statement. And if it's under your county EIN, you should be able to review that. So that would be the easiest way to countermand fraud, especially if you think that it's just fake financial reporting, because all softwares have audit trails. We can find out who falsely put those transactions in to make it look like the account's balanced. But please, please, please look at those bank statements. To learn and implement best practices. I think that any resource the county can give to the community and vice versa is always worth the time and effort. And we can always learn from each other. That's why I think fraud is such a fascinating topic. And there's a reason that Law and Order has been going on for 20 seasons. There's just something so fascinating about the schadenfreude of embezzlement and murder and all that other stuff that it's like watching a train wreck. It's fascinating and it's entertaining, but until it happens to you.
So we've got a couple of questions, Kate. One kind of goes back to the other question that you have above, where it talks about if it's not an option to go to the county commission and it wouldn't be an option going to the sheriff, would you recommend going to the state audit office in which to make that perhaps known and maybe a little more accountable to the county commission?
Atlanta, I'm like, push the button, don't push the button. But the state auditor's office is not an audit. It is compliance. They are compliance audits. They are not going to get in there. They're not going to look at your financial statements. They're going to look at, did you do the financial statement? They're really not there to catch anything. If anything, they're reactive. If they're doing that type of audit, they're reactive because it was already discovered and the FBI has come in and the courts have ordered a state audit. But they're predominantly for compliance. So if you are expecting in any way, shape, or form that your internal auditor and your external auditor are there to tell you if there's fraud, they're just not. They might get lucky, but predominantly it's going to be your day-to-day employees. And that's why it is so important that you have a processes in place for reporting if you don't have one. And like I said, make that very publicly known within your employee structure. Make sure that that's inside your county handbook and that there's a safe place to do that. But to answer your question, Greg, after my diatribe of why I'm zero impressed with state auditors' offices, is that your next step would really be the Fed. If you can't go to your county, which that's on the county, if you can't go to your sheriff, that's terrible. There is really no next step except for the Fed. I truly don't believe the state is going to be able to help you. Now, the state, you can call an audit on any entity, with so many percentage of signature, that's pretty blanket state in every state, that an audit can be called. And if a fraud audit is called, but again, you have to do the signature process to get that audit done, and the county has to foot the bill for it. So why, as a county entity, would you not want to create that culture where they could just come to you? If you're like myself, my county, and you do not have a county auditor, but I have that relationship with that is a tough one.
Well, let me ask you a piggyback question on that tough one. So just to clarify for the folks, can you note the difference between a financial audit versus a performance audit, and how the former seeks to find the wrongdoing, whereas the latter may simply be used as an opportunity to advise the council and close vulnerabilities to make certain processes are more secure and reduce their risk down the line?
Sure. Yeah, that's actually, that's a good question. It's a good question. So a financial audit is strictly that. They're only going to look at the numbers. They're going to look at that 6% change year over year. They're probably going to look back. Most of those are either your annual financial audit, which is reviewing the year over year from the previous, anything that's a 6% change. That is industry standard. You're also going to be looking at increases. Like I said, if you end up putting that, I always forget the word, the premium pay in, they're going to be looking at anything new, anything that has changed since the last audit. They're also going to be looking at what they put as recommendations or write-ups in the previous audit and see if those have changed. So that is a financial audit, is completely numerical. The other type of audit, what did you call it, Greg?
It was the financial audit versus, and let me go back through and look at my notes. Sorry. Financial audit versus the performance audit. Performance audit.
Performance audits are compliance audits. Are you following your county code? Are you following statutory compliance? And in that, are you affecting the financial data that is then reported? So are you doing correct separation of duty procedures when your financials, the same person isn't receiving the money, isn't depositing the money, isn't reconciling the bank account? So those audits are going to be more compliance. The two of them together are the necessary tools to protect county government from fraud, not just county government, just anywhere that would have these tools in place. Now, I know specifically in the state of Missouri, our compliance audit is once every 4 years and our financial audit is annually. So obviously they find the value in looking at the financials year over year, where compliance is less of a key indicator. But there was a second part to your question.
Yeah, it was basically, let me get back to the notes, sorry. Second part of the question is that, let me rephrase, versus the performance audit, and how the former, meaning financial audit, seeks to find the wrongdoing, rather as the latter, being the performance audit, simply as an opportunity to advise and counsel of how to close some vulnerabilities. So, how do you shrink that opportunity for fraud moving forward?
So both of those are going to be, I know it's the polite thing to do verbal recommendations. It is the polite thing to do, to not put something in writing. We're afraid of how people will react when we actually write them up, especially when there are counterparts. But putting those in written form, whether it's just, this is just, like a warning ticket when I might speed, instead of an actual ticket, it's there so that when 5 miles down the road, when I'm still speeding and I get pulled over again, there is a history. So when we take those writtens and we report them to the county council, they can choose to implement or change funding structure or put new things in place to mitigate those. And it's almost the only opportunity that an overarching department would have to get before the county council and say, this is a weakness, we need funding for it, and we need new technologies for it. And it's clearly been indicated as an issue. Where as an individual office holder, we might not have that funding stream, we might not have that ability or even the access. I can't just put software on our county server. So that might be, it's a great tool to get before the county council and have those funds allocated.
And I think our good friend Sean Milne actually describes it well. He stated in the chat, it says performance audits can also be used as a tool for increasing compliance before an infraction, but can also be used proactively to reduce risk by recommending procedures that close weaknesses. I think that's a good statement.
Yeah, I'm a financial person, so.
Question that came in over the email. This is, it may be out of the scope for the webinar, but you may be able to allude to it. So as far as elected officials, how can you rebuild public trust? What is your recommendation for that when fraud or embezzlement has come to light?
That is so hard. So I took over a county near me to give them, some protection there. Their county collector embezzled $320,000 over 4 years. And so when that was discovered by the bank, it was then reported to the sheriff, then reported to the FBI. That office by statute was then shut down. And we took over, we being my office, took over with the help of another county, the payment processes of that county for a short period of time to kind of stop the hemorrhage. I think seeing the support, not just from the county, but the external county, to put the focus on that person, showed that, this was a one-person perpetuated crime. But of course, that caused a lot of discord with, again, that they had a county auditor, they had a 3-person commission. So it did cause question, obviously, of, well, how is this not caught? But then the beauty of it is the community, along with the commission, along with the auditor, created the program of moving forward. And that was putting things in place and changing how even the public interacted with that office. Specifically, it was a taxation office. And so when you wrote your tax check for your real estate or personal property to the county, historically, you would write it to Kate Becker. And that's how those funds were getting embezzled, as she was depositing them into her own private bank account. There's really nothing to indicate that it was for taxation. So the county, along with its citizens, they had to come together as a team and decide that, okay, well, that was one thing. So let's just now write it to, insert county collector here, not the name, but you're writing the check to the county, which seems like such a simple process, a simple change, but it's amazing how much that could mitigate the ability for fraud. But that county, I'm happy to say no one lost their reelection in that. There was not a huge public outcry of because they had a fantastic bonding company that made them whole very quickly. The FBI investigation exceeded that of the state auditors. The state auditor's office just kind of audited until, so we have different levels of dollar amounts that you prosecute at. And so when you hit, we'll say like $300,000, it didn't really matter to them if it was $300,000 or $340,000, because the next threshold was $500,000. So they knew it wasn't $500,000. So once they hit 300, they just kind of stopped. So the FBI is the one that kind of finished that audit for them. And they were very lucky in that the bonding company went off the FBI amount instead of the state auditor's amount for how to make the county whole. So everyone was made whole again financially. And then the county and its citizens and the elected officials got to make the plan to move forward. And the new appointed, or the newly elected, because this happened like 6 years ago, they're doing great. But yeah, there's going to be egg on the face of every county tax collector, of every elected official in that county. How did you not know? And the thing I never understood is when that happened, I was getting all these phone calls like, she's the last collector I would have ever expected to embezzle. And I'm like, question, who's the top collector you would think would embezzle? Let's look at that person, because let's not do this twice. So you just never know. You just never know. And just a side story on that, the most frustrating part of that whole lawsuit was when she went to court for her sentencing. Her argument for why she should be given a lower sentence, and I shouldn't laugh, why she should be given a lower sentence was she didn't feel like she financially gained $320,000. She felt she only financially gained between $40,000 and $60,000 because she lost the rest of it at the boat or at the casino. We call them the boat here in Missouri. She lost the rest of it at the casino. So she felt that she only financially profited $40,000 to $60,000 and should only be prosecuted and sentenced off that amount. It did not work, but it was a nice try.
Well, a nice try.
Yeah.
We do not have any other comments. Do not see any hands raised. How about final thoughts?
Sure. So I do have in this slide deck, there are some very fascinating case studies on county fraud specifically, and there are links to those individual presentations. These are things from contract fraud, bid fraud, embezzlement. If you have not watched this movie, All the Queen's Horses, I absolutely highly recommend it. It is free. You can just Google it. It is brilliantly put together. It's a university production, but it's so brilliantly done. And this was the largest perpetuated municipal fraud case in the United States to date. And she actually got out of jail last year. We were not happy about that. She got out early and we don't know why. But yes, so All the Queen's Horses, awesome. Contract fraud as county commissioners or bid fraud, be very, very careful about your text messages, about your emails, about how you handle a bid process. One of these cases, I believe it's Keith Becker, he helped essentially had a bid for buildings removed after a hurricane, derelict buildings. Greg, I know you're working on this, so watch your little back here. Buildings demolished because they were blighted after a hurricane, and created essentially a fake bid process, set it up to where another company would be the winning bid because he took letterhead from a previous bid from another company and then highly inflated it, and then handed over the winning bid to that contractor to take down these buildings. And then they in turn turned around and made him a contract employee to help with some of that mitigation at quite a large dollar amount. So he is in federal prison because, again, those monies were paid wire, digital fingerprint. So there's so many cases that we see, and this one here, if you get time to watch this one, Mary Mccarty, she is out of jail, and same thing. It was bid fraud. Her husband was involved. From what I've heard, she's a very, very nice lady. It was too easy and she made a bad choice, and she lost a lifetime career in government for making this poor choice. And so hers is kind of an after story, but there's no shortage of cases. If you feel like you need help with with any type of internal audit, or if you just want someone to review, or you just want to spitball, or I have so many checklists, so many things made up that can be used. Like I said, there is a one pager that will go out with this PowerPoint presentation. that are action items that you can take away and implement in your current structure, please reach out to me. As if you've never met me, I am super chatty and I'm super friendly and I will talk to anybody. So especially about fraud, because I think it's fascinating because I love math. So thank you so much for being on here today. I really appreciate you taking time out of your day and for caring about the financials within your county structure. I have done everything from international fraud down to nonprofit fraud. So there's not really a county government sphere that I have not dug into. So happy to help and lend that expertise if needed.
Thank you so much, Kate. Before turning it back to Elena to close us out, I just want to thank everybody for joining us in today, taking time out of your busy schedules to learn about this important topic. I know that the slide deck will be able to be shared, and then this will be recorded and has been recorded, and we will be disseminating that hopefully shortly. So with that, Elena, thank you so much. The floor is now back to you.
Thank you so much. A huge thank you to Commissioner Puckett and to Collector Becker. This has been a delightful presentation. I am not in the financial arena, but I always love seeing Collector Becker's presentations. They are always so interesting and I always learn something. As Commissioner Puckett mentioned, this has been recorded and we'll provide a link to the recording as well as a link to download a PDF of this PowerPoint presentation. And I did want to let you know that we have just opened registration over on our NACo events page. I will drop a link to that in the chat for a national membership call on Monday at 1 p.m. Eastern time about the release of the final rule. So if you have a chance to hop over there and register for that, we would love to see you over there. And with that, we'll go ahead and close. Thank you all so much.
Thank you.
Thank you.